Now touch base with the top management of M&M Finance, and why not? Recently, you saw that stock hit a 52-week high. That's after its disbursements went up 75% in the month of August. There you go, M&M Finance currently trading 1% higher, recently scaled to a 52-week high. So let's welcome on board the top management, Ramesh Iyer, the Managing Director and VC. Good morning. Thank you so much for joining us. My first question is what our viewers will really want to know. 75% uptick in disbursements for the month of August. Where did the growth largely come from?
No, I have been repeatedly saying rural is doing well. The sentiments are very positive, and it's not any one particular segment which is doing well for us. I think we have seen it across the product, across the geography. And I keep repeating, in case the vehicles were to be available much more than what it is today, then our disbursements could have even be better. So the demand for all the vehicles, whether it is for the utility vehicle, whether it's the personal segment vehicles, whether it's the LMV, whether it's commercial vehicle, tractors, pre-owned vehicle, I think we are seeing all through the demand is holding up, sentiments are positive.
Okay, I'd like to now get into specifics and, raise a lot of questions that analysts have been asking and what channel checks are indicating. Auto financiers, even though volumes have picked up, the near-term challenges are still very much there. Commodity prices going down, but still elevated from where they used to be. Margin compressions. Can you share with us what your outlook for the sector is in the coming quarters?
See, again, one has to look at it as follows. Even in the past, we have seen when the interest rates do go up or the fuel price do go up, subsequently, definitely the passenger fare or the freights do get corrected and the operators normalize their cost. Yes, there will be some lag effect for sure, but I have not seen operating cost suppressing demand. So therefore, I would continue to believe that the demand will remain buoyant. Definitely, yes, people will negotiate, people will ask for some finer rates, etc., etc. But I think it won't have an impact on the demand, is my feeling and judgment. And I think that definitely the freight rates will go up, the passenger fares will go up, and operators will start adjusting for the cost increase.
Mr. Iyer, morning now. Do you expect the interest rate hike to dampen sentiment? And in light of that, where do you see your net interest margins in the short term to medium term?
No, so clearly, as far as NIMs are concerned, we will also push up our lending rates. We have already moved it up by 25 basis point or so. And we will keep reviewing. And if the borrowing cost does keep going up, there will be a correction to the lending rate that will happen. And that's one level of correcting the NIM. Second is the product mix change. As I said, the demand for pre-owned vehicle is high and that comes at a different yield. And therefore, if you look at the product mix change, that will protect the NIMs further. The third is for us, not every borrowing needs to be corrected. We have good ALM match and therefore only a percentage of our borrowings come at a new rate. And therefore our blended rate does not increase in line with the borrowing rate. So if the borrowing cost has gone up by 150 basis point, our overall cost of funds should have gone up by only about 50 basis point because we do have the past borrowing continuing. So therefore, please understand for an NBFC, one will look at all three phases and over a period of time, they would kind of come together and the NIMs would be protected.
Now, the company has also laid their vision to contain GNPAs below 7%, and they have managed to remain stable. Now, I believe you're expecting an improvement in stage 2 and 3 assets as well in the September quarter. What's really giving you this confidence? And can you highlight for us what the NPA trends have been so far and where you see credit costs in Q2?
So clearly, if you look at our collection efficiencies month after month, it has maintained a 95-96% kind of a level, which is much higher than ever we've seen in the past in the first quarter or the second quarter. Basically, you should understand rural always the first and second quarter collections are much lower due to climatic conditions, monsoons and all of that. And then it picks up in the third and the fourth quarter after the harvest, the tourism picks up, the wedding season comes in, all of those activity. And you see overall collection improving because the vehicles get better utilized. What we've seen this year, as I said, collection efficiencies have been pretty good. We have seen month after month, the NPAs are coming down. More importantly, the stage two has also showing continuous decline, which means there is no forward flow happening. And which is where the comfort and confidence comes from to make a statement that we do see September further correction to our NPAs as well as to stage two. All this is at the back of substantially improved economic activity. I'm sure all of us are aware that tourism at its best, people movement has fully picked up. The monsoon is average plus, therefore the cash flows expected going forward will also be positive. I think put all this together, I continue to believe that the collections will remain very, very attractive, very high level percentages, and therefore the decline in NPA would be visible.
Right. So, as you grow, will you be becoming a bank? And is that going to be the natural progression then?
No, so clearly, this again has been a topic that we have touched many a times in the past. As Mahindra, will we look at bank as an opportunity? I think the answer is yes. We are the right candidate when it looks from the size of the balance sheet, the kind of product that we do, the geography that we serve. We play the financial inclusion game extremely well out there, and we've been doing it for the last 30 years. So therefore, everything fits in well. Mahindra as a group will look at this opportunity. We would definitely see it very closely. We will wait for what the regulatory directions are. And if there is that opportunity which is available, of course, we will not want to miss that. And we will look at it very, very closely before we decide either ways.
Okay, great to have you on the show. Thank you as always for taking the time out and speaking with us. And that's the perspective really coming in from Mr. Ramesh Iyer on where Mahindra Finance heads next.